Kevin Hincks, co-host of Fast Market, live at the CBOE, is with me now. And of course, we're waiting on any and all tariff news, August 1st being the big day, still in place. Some of your thoughts this morning.
Good morning, Nicole. Yeah, we're 8 days away from a Fed meeting. We're 10 days away from that August 1st deadline. We're 2 days away from Google, Alphabet, and Tesla's earnings. So really today we sit and kind of wait for what's happening the rest of the week. We'll get very light week for economic data, but Friday we'll get a durable goods number that's expected to be fairly volatile due to a big drop in airline orders in May or in June. So be careful of that volatile headline number in durable goods coming out on Friday. But we'll get some more housing. We'll get new home and existing home sales. We'll get some PMI data later in the week. But I think that this week, as we're in the Fed quiet period leading up to that meeting, it's funny. We're in the Fed quiet period, but Jerome Powell's speaking tomorrow, and so's Michelle Bowman. So I don't know what their definition of quiet is, but as we wait for that, I think, to start off the week, midweek, Google, Alphabet, Tesla's earnings, those will be significant. Remember, both these stocks, though rallying lately, are two of the cheaper names right now in the Magnificent Seven in terms of performance. So it'll be interesting to see those come out midweek. That's Wednesday after the bell. We'll get a lot more airlines this week. We'll get American Air or American Airlines. We'll get Alaska Air, and we'll get Southwest out this week. So we'll finish up with looks at the airlines. So that's always something to look at. Remember, we've got Delta and United so far actually giving good guidance for the second half of the year. So, yeah, it's kind of a light week for economic data, but those earnings on Wednesday should be a big one, Nicole.
Okay, yeah, a busy week ahead. And the earnings thus far, I saw 12% of the companies have reported thus far. 86% have actually beat the street, but it's only the beginning. And so we'll have a lot. I see on the list there, Coca-Cola, Lockheed Martin, GM, RTX, and DR Horton tomorrow. So we'll have a busy week. For eco data, you mentioned some of it. New home sales, you did have Scott Bessent out still pressing for lower rates this morning, just saying that would really sort of free up mortgages and get things moving in the world of home sales. That's been one area that has been expensive and a glitch.
Yeah, one area that you're right, that you can't argue with, that is suffering from the 30-year mortgage rates being just under 7% is housing. Right now, as we sit, going into the second half of the year, housing is dead in the water, and you don't need much in terms of a lowering of rates and lowering of the 30-year mortgage to see those mortgage applications and refi applications jump. But right now, as we sit, it appears, and think about it from a common sense perspective, if you're a home buyer or someone who's about to go looking for a home or a mortgage, and you expect the Fed to cut twice second half of the year, you're not going after a mortgage now, you're going to wait. You're going to wait till September meeting, see if they lower rates, and if they lower twice at the end of the year. So yeah, it just seems to me like the housing market is in a dead in the water period where they're waiting for lower rates, and that's common sense wise. That's exactly what probably people should be doing. If you see lower rates in the future, you're waiting. You're waiting to refinance. You're waiting to buy a new home. So I think that's what you're seeing in housing, waiting for lower rates to show up, Nicole.
Yeah, we have Verizon that's looking good today, so we'll be talking about that. We did hear that Palantir and Coinbase, JP Morgan saying that those were some crowded trades. These names have done so incredibly well, and stocks have been at records. Last week we saw records for the S&P and the NASDAQ, and this morning we start with more up arrows, continuing to climb the wall of worry. Less worried, I guess, about tariffs these days, at least according to one of our guests who said, sort of tariffs in the rearview mirror, and looking more at the trends of AI trends and manufacturing revival.
Yeah, first let's go over what you're talking about with tariffs, right? Tariffs, the U.S. economic trading community, financial community, investing community, they get uncomfortable when news hits, right? Like tariffs when they came in April. And then they get less uncomfortable as time goes on, and they get more comfortable with where we find ourselves. And I think that's what you're seeing with the whole tariff discussion. When it started early in the Trump administration and April, markets were very uncomfortable with the thought of tariffs. They're getting much less uncomfortable as we go, and you see that a lot. I've seen that throughout my career. A news headline hits or a new theme in the market hits, and markets get uncomfortable, and then it dissipates over time as they get more comfortable and they get back to fundamental investing. So when I see that, that's what I see the market doing. As the more and more tariffs come out, it just seems to be less impactful on the overall market. Scott Bessent was already on television this morning talking about the negotiations, and not so much focused on August 1st as focused on the best possible deal whenever that happens. So we'll see how that works out throughout the week. But, Tesla's up pre-market. And so Google Alphabet is both up pre-market. Those stocks will be in focus as we start the week. But it's also the middle of summer. So I wouldn't expect an overreaction or any big trading days coming up the next couple of days. But Google Alphabet and Tesla, that'll be the highlight of midweek for sure.
Oh, for sure. Looking forward to those, really sort of setting the tone for those Mag 7 names here. We're 22 minutes away from the opening bell. Anything else on your mind here? I mean, I continue to look at a lot of the earnings. I saw a warning from Stellantis. We're going to cover a lot of these. The food stocks, Domino's had some good sales. McDonald's brought back the snack wrap. We've got a lot of story stocks, too.
Yeah, I just think that we are in, remember, option traders especially, and traders in general, always be aware of where you are on the calendar. And mid-July, post-July monthly expiration, as we start getting closer and closer to large cap tech, remember, that's what we're easing towards. And the bar is extremely high for a lot of these names. You mentioned we're at all-time highs. A lot of things that's going to come into focus are how much these stocks have run, and especially large cap tech. You can look at them, they're significant. Even a stock like Tesla that's been beat up somewhat this year, it's up 35% in the last 3 months. So it's had a nice bounce back off the lows. But then again, Nicole, since April, every stock has recovered significantly. So I think for this earnings season, though we may, like you mentioned, get great earnings, the bar is going to be extremely high for stocks to go higher on those earnings. You need big beats.
We've been seeing that. You're absolutely right. Kevin Hincks, great to see you there at the CBOE on this Monday, kicking it off.